Welcome to Business Insight, your go-to show for in-depth conversations on the trends shaping the business world. I am Justin Akadonye, your host. Today we are diving into a game-changing report that projects Africa's digital payments economy to hit a staggering $1.5 trillion by the end of this decade. Now, if you think about it, this is a massive shift fueled by two major forces, which are improved internet access and financial inclusion. More Africans are All right, welcome back. Now, Africa's digital transformation is being driven by rapid advancement in internet penetration and financial inclusion, two of the fastest growing enablers of digital payment. Now, according to a recent report, internet penetration in Africa is projected to grow at a compound annual rate of 20%, while financial inclusion is expected to expand by 6% per year. With these numbers in mind, today's discussion is crucial. To help us break this down, we have a special guest in this. Okay, he's joining us via Zoom. Darlington Onyeagoro, the co-founder and CEO of CashbackNaija, is at the forefront of financial innovation, and he'll be telling us more what we need to know as regards this report that was just recently released. Thanks for joining us, Darlington, on Business Insights.
Thank you so much, Justin, and thank you for having me. Good morning, our viewers. Awesome day. Yeah.
All right, let's just dive straight into it now. Now, the $1.5 trillion projection is ambitious, really. What key factors do you think are fueling this rapid digital payment growth across Africa?
Okay, we have factors like mobile penetration. Africa has a mobile-first youthful generation. Most of the youths we have in Africa encountered internet mobile first. That means they encountered internet from the mobile phone instead of the laptop. So we have a mobile first generation. Africa is predominantly a youthful, has a youthful population. And then there's also fintech innovation. There are hundreds of fintechs, all right, innovating, trying to solve massive scalable problems in Africa. And there's also improving infrastructure. So these are some of the key drivers of African digital payments boom. The infrastructure is getting better, payment is getting better, and so on and so forth. Yeah, thank you.
Okay, so from what you said, let's continue. Nigeria is a major player in this digital transformation, and you talked about the youth population also driving that. What other drivers of digital adoption do we have in this country?
In Nigeria, in 2003, 2 years ago, unfortunately, when we had the cash crunch in Nigeria, that led to an increase in trust for digital platforms. So when people could not access cash due to CBN law when they printed their new notes, all right, people had no choice. They had to transact, they had to feed their family, they had to eat, they had to trade. So eventually, they fell back on POS devices and bank transfers. All right, so that led to increased trust in digital forms. About 2 weeks ago, I did an analysis about payments in the traditional supermarket. And I found out that cash payment has fallen to 15%. So you have POS transactions, card-based transactions are still highest when it comes to supermarkets, restaurants, and retail outlets, about 40%. Bank transfers is about 35%, while cash has dropped to less than 20%. So cash transactions are declining because there's an increased trust in digital platforms in Nigeria. And with the adoption of BVN and NIN, people have more trust because we get to understand the identity of these people. And these are some of the things. Okay, mobile money, e-commerce also is also increasing. It's rising. People are now buying stuff online on Instagram, on WhatsApp, on other digital channels. These are things that are actually helping to drive this digital transformation in Nigeria.
All right, now let's talk about internet penetration and financial inclusion, which are fast expanding. How have they really changed consumer behavior as regards some payment?
More and more people are now glued to their phones. I believe that everybody has a mobile device, and people prefer speed and convenience and also rewards. So, like I said earlier, cash is declining. Cash transactions are declining. Cash is leaking, but they're declining rapidly in place of mobile and card payments. So, mobile and card payments are gaining trust, while cash is declining, especially in Nigeria. So, people prefer, I don't have to carry cash around. I want to buy fuel, I can just use my card and swipe. or I can make a transfer to a dedicated collections account. So the speed, the convenience, and sometimes the rewards that are attached to digital payments are making people to actually embrace digital payment. Like from my own company, CashbackNaija, which I'm going to talk about probably later, is rewarding people for making digital payments. We cannot track cash payments. So when you do a cash transaction, it's very difficult for us to track those transactions and reward you. So for reward to happen, the reward ecosystem to grow in Nigeria and Africa, because the way it is very big in America, Europe, and the rest, they have to be digital payments so that we can track those transactions either through card or bank transfers or mobile transfers, and then reward you accordingly. Yeah. So reward is also driving consumer preference. Speed and convenience is also driving consumer preference for digital payments.
All right, it's really interesting what you just said about CashbackNaija, which is a new platform we understand you have founded or are founding. So, like you said just now, it aims to provide cashback rewards, which is really not so big in Nigeria, to users as they buy from partners, merchant or partner merchant. Tell us how that really works.
Okay, so what led to CashbackNaija idea is that we realized that retail transactions in Nigeria is in excess of 40 trillion annually. Out of that 40 trillion, more than 90% of those transactions are still offline. Offline means that they take place in physical merchant locations. So, I mean, thanks to the likes of e-commerce platforms, Jumia, Konga, the rest, Instagram influencers and all that, they are still less than 10%. 90% of transactions still happen at the restaurants, at the supermarkets, the fuel stations, the gym. They are all human interaction. They are human interaction based. And that's in essence of over 30-something trillion naira in transactions annually. So what we have designed with CashbackNaija is to find a way to reward you when you actually go up to make payment in our merchant locations. So we are integrating with the card schemes like Rev, Visa, and MasterCard, so that we have access to over 150 million cards. By access, it means that all the card schemes in the three major card schemes, Visa, Rev, and MasterCard, we're able to, once you come into our ecosystem, we're able to monitor your cards to know when your cards, for example, do transactions at a participating merchant location, and then we can apply the cashback rewards. Now, these rewards are created by merchants. So a supermarket can say, if you spend up to 20,000 naira in my supermarket, I'm willing to give you 5% cashback. A restaurant can say, if you spend up to 50,000 naira in my restaurant or whatever, you are entitled to a 1,000 naira cashback. So these cashback rewards, we can only track them when you do a digital payment. Either you make a bank transfer to the merchant or you swipe your card on the POS of the merchant. Either way, we're able to track the transaction, do the calculations, and then credit your CashbackNaija wallet with the appropriate, cashback. So we aim to drive this reward ecosystem in Africa. In Africa today, reward is still very nascent. Unlike in America, you have so many big platforms like Rakuten and the rest who are rewarding you with cashback and discounts and co. But in Nigeria, we have very few players, and these few players are still struggling. But we believe that this model that we have, targeting offline transactions or using digital payments, is going to be a game changer for Nigeria and Africa as a whole. Yeah.
Well, interesting. In passing, you also talked about MasterCard, and from what we understand, it is investing heavily in fintech, SMEs, and cross-border payments. What impact do you see these investments making?
Well, MasterCard investment they enhance infrastructure, because you cannot do payment without payment rails. You need payment rails to make payments work. So they're actually investing also in infrastructure. They also help to scale fintechs. So what MasterCard, not just them, even Visa and the rest, what they're also doing is also ensuring that if as a fintech you are making progress, you have traction, then whatever they are doing also aligns with their vision, their ethos, then they also come to help you. Last month or last 2 months, Visa, for example, invested $10 million in MoneyPoint, because MoneyPoint has been declared a unicorn. MoneyPoint is doing well when it comes to financial inclusion, but Visa has a burning desire right now to actually increase what they call contactless payments in Nigeria and Africa and beyond. So they feel that with MoneyPoint, with the number of devices, they have over 2.3 million POS devices. With MoneyPoint's partnership, they are able to drive contactless payments in Nigeria. So MasterCard and the rest, and some of these guys are all investing, Visa, Web, they're all investing to see how they can empower SMEs to thrive in a digital-first economy. They're investing in infrastructure, they're investing to scale fintechs. And this impact is going to actually have the impact on cross-border payments, because without payment infrastructure, cross-border payments is a mirage. Only few players are in that space, only few players, and the regulations are not helping. Regulations are varied, and spotty in different African countries. So you need to build that divide, that bridge between African countries to make sure that cross-border payment works in Africa. And that's where MasterCard, Visa Card, and some of the other big fintech giants come in.
All right, now let's talk about SMEs, small businesses. Now, many small businesses are still struggle with digital payments. What are the biggest barriers preventing wider adoption?
Well, some of the key barriers are poor digital literacy. All right, not everybody understands how this digital payment works. No matter how they see it as fanciful. For example, I went to prospect for business in a very big company. I don't want to mention the name of the company here in Abuja, Nigeria, in a very big company. And these guys if I'm not exaggerating, they are doing billions or millions of dollars in transaction, and they have told me, do you know that we don't have a single mobile app here? We don't run mobile apps. We don't run mobile apps in my organization. Everything that has to do, we have to do directly with the bank account officers. So we want to make payments, we have to write to the bank, and the bank is going to effect the transfer to your account. So because the chairman does not trust anything digital, he doesn't trust anything. He's an old school man, multi-billionaire who doesn't trust anything digital. So if at that level, people that are doing millions of dollars in transaction per month are still, going old school. Imagine the number of a lot of SMEs in their millions who are still having digital literacy problems. And also, some people believe that the transaction fees, especially when there's collection through cards, it's expensive, about 1.5%. Sometimes it's very expensive. Like now, we also have weak internet area. In rural areas, the internet is still very spotty. Even in urban areas, we have challenges with the internet. All right, so these are things that actually have made them to struggle. So you have number one, poor digital literacy. Can you still hear me?
Yeah, we can. Go ahead. Yes.
Poor digital literacy, high transaction fees, weak internet in rural areas, and distrust, the same distrust for tech. These are some of the things that are causing the barriers.
Okay, let us talk about fraud and cyber security, which are also major concerns. What measures should businesses and consumers take to protect themselves?
Okay, I mean, the old saying is use strong passwords. Some of us, our passwords are easily compromised, all right? We use a password that has to do with our birthday, or your son's first name, or your pet name, all right? So, I mean, if you're creating an account today, Google has a way of suggesting very complex passwords for you, and they can store it for you also locally so that you can also access it if you forget it. So use strong password. Then we have what they call two-factor authentication. So two-factor authentication ensures that even after you are logged in, you are allowed to also validate yourself by either receiving an SMS or you go to an authentication app like OT or Google Authentication to get a 6-digit code to allow you to access the platform or the website that you want to use or the app that you want to use.
Yeah.
And we also advise you only transact on verified platforms. You have to ensure that the link, there are a lot of phishing sites, all right? Those sites may look like the bank site you want to go, but it's not actually the bank. Look at it again. Maybe the E is upside down or the A is not A. It's somewhere Spanish A word or something like that. So a lot of phishing sites are available. So you have to transact on only verified platforms and only do business and invest in businesses that you trust. And we also ensure that businesses themselves fight cybercrime by investing in robust security protocols. You have to invest in security protocols that ensure that even if it's not impossible to eliminate cybercrimes, it's limited when it comes to your business.
Okay, now with Africa hosting 9 of the world's 20 fastest growing economies, how do you see digital payment shaping the continent's future economy?
Digital payments will deepen trade, they will create jobs, and they formalize the informal sector. So, like I said, last time I checked, the trade between African countries is roughly less than 15%, but it's growing, all right? It's actually growing. So the more digital payments increase, the more among these African countries, payment is being formalized. The informal sector is being dragged in because it means that I can easily send money to somebody in Nairobi. I can send money to somebody in Kigali. So I can do business with a woman in Kigali. I mean, when I was in Nairobi, I went for a visit. I met a Nairobian, a Kenyan woman who was preparing African delicacy, Nigerian food. And she told me that she buys some of her ingredients from Lagos. So I was asking myself, how does she do? She has to travel once in 2 weeks or so, or she has a supplier from Lagos that brings in some of these Nigerian spices, ingredients from Nigeria for how to prepare Nigerian-made delicacies here in Nairobi, Kenya. So if I know that payment can be very easy between Lagos and Nairobi, then trade is going to deepen. That will create more jobs, all right? And that will accelerate inclusive economic growth across Africa. So we believe digital payments has a lot to do to deepen trades across Africa.
Okay, on a final note, now let's talk about regulatory landscape, and it's actually evolving in Nigeria. How supportive is the government towards fintech and digital payments? Last note.
Okay, we are very fortunate with the Minister of the Digital Economy, who is also part of the fintech ecosystem, Osum Tijani. Even before then, the previous one also helped. The government is becoming more and more supportive with the Sandbox initiative. With that Sandbox initiative, fintechs can, for example, sign up and they can test their API, they can have access to APIs, open banking APIs, integrate those APIs, test them in the Sandbox environment, get the government approval, and get government guidelines on how to move before they can launch their startups, all right? But some of the policies that we are seeing today is encouraging fintech collaboration. People like SEC, CBN, they are also turning around. SEC is talking about they are giving licenses to people that are into the crypto space. CBN is also, turning around, trying to be supportive and so. Gradually, the government is gradually turning around to see that the startup ecosystem is not a joke, and they have to do everything possible to support the startup ecosystem. I think it's becoming better than before. Yes.
All right, Darlington, this has been an insightful conversation. Thank you so much. It's clear that digital payments revolution is creating exciting opportunities, and it's great to see companies like CashbackNaija leading the charge. Thank you so much for joining us on Business Insights.
Thank you so much, Justin, for having me, and thank you, our viewers. Thank you so much.
All right, and to our viewers, the future of payment is digital, and Africa is on the fast track to $1 trillion economy. If you are a business owner or consumer, now is the time to embrace the change. Now, keep the conversation going with us on our online platforms, and join us next time for another exciting edition as we trend and shape the future of businesses and finance in Nigeria. Until then, stay informed and stay ahead. Bye for now. I am Justin Akadonye.